Good day, listeners. I'm your financial accounting teacher for Senior Secondary School 2. This particular subject is based on curriculum recommended by the Nigeria Educational Research and Development Council, NERDC, under the Federal Ministry of Education. We have a list of themes and topics that I will be taking you for SS2. Under Theme 1, we have depreciation of assets, and we have a topic under the themes which is a straight line method and the reducing, balancing, or written down value method. The second theme is manufacturing and partnership account. Under it, the topic under the themes, we have manufacturing account, profit and loss appropriation, partnership capital account, and the current account. And we also have admission of a new partner and goodwill account. Theme 3, we have accounting of non-profit making organization, where we have under it, we have receipts and payment account, income and expenditure account. So the fourth theme, we have a special account which are single entry and incomplete records. Then the last theme, which is the formation of companies and the Nigerian financial system. Under it, the topics under it, we have a formation of a company, private and public companies, quoted and unquoted companies, financial systems, issues of shares, loan capital, method of message funds from the capital market, and requirements for accessing the capital market, and the benefit of capital market. I will start from the theme 1, which is a depreciation of assets. What is a depreciation? What is the word depreciation? Depreciation can be defined as the fall or increase in the economic service potential of an asset as a result of wear, tear, usage, obsolescence, and inadequate. When we're talking about, in another word, depreciation occurs when an asset has been used for a long period of time, and you see that at the end of the day, it depreciates at the end of the day. So, depreciation can occur in many fixed assets, and it is mainly on fixed assets. And we have different types of fixed assets, which are, we have motor van, motor vehicle, furniture and buildings, and the like. Now we'll be going to causes of depreciation. What are the things that causes depreciation? The first one, we have physical factors. Physical factors are also the one that can cause depreciation, like dampness, flood, heat, will cause the asset to rot, rust, and decay. This is not talking about wear and tear here, but it's talking about decay, rust, flood, or heat, or anything that might happen that might bring depreciation, that make depreciation to occur in an asset at the end of the day. Then the second one, we have wear and tear. Wear and tear will fall the value when an asset are in constant use and thus one day become due for replacement. And that's why we are preparing depreciation to know the state of our asset, and when it is necessary for company to replace them with a new one. So here we have a wear and tear, where asset can, by using asset for a long period of time, then it become due for replacement at the end of the day. Then we have the third one is a passage of time. We have different type of assets. Like I said the other time, we have fixed assets, and under it we have tangible and intangible assets. Passage of time can occur in the intangible assets like copyright, patent, and so on. So depreciation as a result of passage of time, therefore depreciation is written up, and it is referred to as amortization. So passage of time can occur in a copyright. Copyright is an intangible asset. patent is also an intangible asset. The fourth one is we have obsolescence, which is asset may be rendered. You know, we have different types, but it is not restricted to the intangible asset. It is also have something to do with a tangible asset, like I've mentioned earlier. So asset may be rendered out of use as a result of obsolescence resulting from change in technology, government policy, and so on. Obsolescence is just when there is change in technology. I mean, the company, the technology, there are some technology that they are outdated, whereby there are some new inventions, technology that have been innovated by the scientists, so of which they employ it in the working of the day-to-day activities of a company. So those systems, technology that have been using in the past might be replaced with the new one. So in the course of that, obsolescence setting at the end of this. So it's also another causes of depreciation. It has nothing to do with wear and tear, but it is as a result of change in technology or change in government policy, which can bring this kind of depreciation. Then the last one, we have depletion. We have depletion. Depletion has something to do with mineral resources. You know, we have different types of mineral resources. We have gold, we have silver, we have timber mining. So those assets, they are also assets, and depreciation can also set in at the end of the day. So under it, we have a depletion. This is the process of allocating the cost of natural resources to a unit removed. Examples of the assets are timber, mining, and so on. So that are the causes of depreciation. Then we'll be going to elements of depreciation. Those are the things to be considered when you are preparing depreciation. And like I told you, depreciation is what is every company imposed to prepare depreciation at the end of the day, to know the value of the state of their asset at the end of the day. And you know, different assets are allocated with a numbers of useful years of which they can function economically, of which after that year they became useless, and they can be disposed by the company and replace them with the new one. So the element of depreciation we have here is the original cost of assets. And that is a very paramount thing that one has to take into consideration when we are preparing depreciation. This refers to the cost incurred in purchasing an asset. A cost is very important when you are preparing account. Cost of an asset is very important because that is the way of allocating depreciation at the end of the day. So this includes actual cost of carriage, cost of installation, and other capitalized expenditure on an asset. If you are to prepare, you know, we have a formula for depreciation which we are still going to do justice to. You see that the first thing we need to consider is the original cost of that asset. Then the second one, we have the salvage value. When we are talking about salvage value, this is the estimated value recovered when the asset is disposed of at the end of its useful year. And you know, another name you can call for salvage value is scrap value. Another name is that salvage value is just the estimated value. You know, at the end of the day, when an asset has been used for so many years, at least it will have the scrap value at which the asset will be disposed. Let's assume an asset is 5 years, and after 5 years, then what you have is the salvage value or the scrap value at the end of the day, which is expected to dispose in order to replace another asset. Then the third one is the estimated useful life, and that is very important in an account, even when they are preparing. When you are preparing a financial accounting at the end of the day, estimated useful life is very important in an asset. That is what we assist an accountant in knowing and to know how many years the assets are spent when the company is making use of them. So estimated useful life, this is the number of years of expected, this is the number of years of expected use of an asset at the end of the day. And that year are allocated to different assets. Under furniture, we have 5 years. Like building, in practice, we have 50 years of useful life of a building. We also have many assets like that. Now, we'll be talking about the method of depreciation, but to your level, the only two methods that is introduced here according to the curriculum is the straight line method. That is the first method. And there is something I want to hint you. The method that is acceptable, that most companies do normally use in practice when they are preparing a real financial statement, is the straight line method. But there are some other methods that they use, but the only one that they adopt most is the straight line method. We have a reducing balance method, we have a depletion method, we have revaluation method, we have machine hour method, we have sinking fund method, we have annuity method, and we have sum of the year digits. When you get to our institution, those other methods will be introduced to you when you are doing a financial accounting in the institution, but we are restricted to only two methods here, which is the straight line method and the reducing balance method. Now, what is the straight line method? The straight line method allows for equal amount to be charged as depreciation